Hey, good morning, everybody. Welcome to the morning volatility report, or shall we say lack of volatility report. It is I, Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, welcoming you to another fine day. It is Tuesday, almost. We're running out of August, and we're running out of summer. Anyway, our blog, check it out. Mark was writing very, very, very inexpensive options. Calls are now so cheap, you almost have no risk of a drop in volatility on them. So that's about as cheap as things get, to be honest. That's Mark's blog from yesterday. Also, event-wise, look for our next education seminar, which will be in September on all the basics to VIX and VIX options. It'll be a 3-hour course. It will be on our events page shortly. You're going to see it pretty soon, but it's not quite there yet. Okay, we'll have a date for you. Also, this is for all the people that took our weekend course. The last day to sign up for gold for basically a huge discount. So if you're interested in our gold course, today is the last day of our gold discount, our gold special. And with that, where is my... Let's get to the action, okay, or lack of action. All right. Term structure. You're getting, okay, let's just call it a weekly lift, right? We've got daily, we got a daily option, we have our 7, 6, 7, right? You have all these really short-term options in the SPX. And the reality is, again, we looked at some time spreads in our chat room yesterday. We're going to look at them today. The only really vestige of all we're going to have is from non-farm payroll numbers. At this point, you're paying for less volatility for the holiday, and there is some volatility for the second, right? So this probably could catch a little bit of a bid. We'll check that out. Other than that, I don't see a lot going on until then. So what we're looking for is maybe time spreads. We'll get some sort of number out of the non-farm payroll. It might get a move, but it is starting to look like there will be one rate rise this year, kind of, unless the report is just so awful they don't, but most likely they will. And that's what we've got, okay? One of the next things is, so if that rate rise does start to get more, let's just call it certain. All right, now this is a stock, something that we were following for a little bit here right before. So this has had 2 reverse splits. So clearly it's had a rough time, right? So one thing is somewhat contrarian sometimes is, okay, you've had a 3 times product that has had 2 reverse splits in a year, right? It is possible, just possible, that it's run its course on how low it could go, meaning, there could be a little bit of an upside play in here with rates starting to rise here. That could check the advance of gold. It could check the advance of the gold miners. 2 areas that have blown way, way, way out. And I did a blog on this a couple of weeks ago. Some kind of interest rate rising here is something toward rate stabilization, at least here. Makes gold maybe a little less, and the gold miners a little less appetizing. So we'll take a look at that as well. Other names of note, Hershey doesn't want to be bought. The question is it more of, I think really it's a question of that trust just not wanting to let the company go. And we'll take a look at sort of what is really possible here for the name. Because prior to this, the thing was in the low 90s. All right, we'll take a look at that as well. There's also, this is back in the news again, HLF. Right, you're seeing a little bit, right? Earnings are over. You're seeing a little pop in volatility here, right? because you got the two billionaires arguing over it. Looks like Icon is winning, but you do have a little more vol. So there's a lot of cases where at least you're seeing a little bit more vol, and it's kind of like there's a little bit of fire, and now that fire's gone, and the leftover smoke is volatility. So we'll take a look at those, see if there's anything really interesting to sell in there. But it doesn't look like Herbalife is going away. So that, again, those are a couple interesting where there's some vestiges of volatility. Last thing we're going to try to look at today in our chat room, I know this sounds a little goofy. I don't know what the deal is with the stock, but it's the best performing stock. Right? Mid-June, it was $10, and now it's 22. I don't know if there's a squeeze in play or not, but it's one of the few stocks that it's just the realized vol has stayed relatively high, and now it looks like there's a bit of a squeeze in the options. So, again, not expecting a lot. You have a non-farm payroll number, which it looks like the Fed will raise once this year if they just stop talking about it and just do it. And they have effectively dampened the volatility. Okay. For however they're doing it, for whatever central bank policies, globally, whatever, but global volatility has been dampened to a huge degree. So the only vol we're really going to see, and I thought it was a cool comment that Mark made, the Fed is the volatility right now. And unfortunately, for the first time that I remember, since being in the market since 1989, where the Fed really, even prior to, when you had the global meltdown, now it seems like they're kind of stuck in the economic cycle a lot more probably than they want to be, or at least the equity market views it that way. So big sweeps and changes there are going to mean, I think, those are going to be driving volatility short term when you have VIX at such a low level. It's very easy for the VIX to go from 12 or so to 13, or to 15 or 16, because of the liquidity we have right now, which makes positions, like those iron condors, tough trades. You're just not getting a lot of premium for the sales right now. So we're trying to stick to time spreads. Anything that looks relatively, we're looking for things that try to provide some edge at the time spread. And I think that's the market we have right now. Are we going to crash? Sure doesn't look like it. And the thing is, but there's no real reason to rally. So I'm thinking there will be a point here where we'll see a big search for yield. There'll be aggressive search for yield, and then on we go. All right. And with that, looks like Moss. Did they just report today? I think they did. Oh, they didn't. Takeover? Huh. Anyway, we'll take a look at that. Looks like that's popping a little bit today. And with that, I will talk to you guys later.